Hello, everyone. This is Greg Hallich from the Department of Agricultural Economics. I'm going to present on grain markets and profitability for both the current marketing year as well as the next one that we planted in the spring. Let's have a quick overview of the two crops. So for both 2020 and 21 crops, we've had incredible price increase for both, more so in the current marketing year, but very good prices in the next also. In fact, for corn and soybeans, we have the best price that we've seen since 2013. And there's a good chance those will be the best price we see for quite a few years ahead. The good news is profitability looks exceptional for this year and really good for next. And we'll talk about more of those implications at the end. Let's start with corn. I'm going to cover each crop in detail. First corn, then soybeans, then wheat. So everything, in addition to really strong prices, everything I've kind of heard through the state, or most of what I've heard through the state this year, is that we've had very good yields, in some cases exceptional. About the only negative thing I've heard is that the moisture level has been really high this year, and as a consequence, we have higher dry down costs. This field in southern Woodford County, harvest started in early October, and I think the moisture level was right around 20%, and that was pretty typical throughout the state at that time. The next thing we're going to do here is we'll look at supply and demand dynamics at the national level to see what's driving prices. We'll do that for all three crops. And just as context here, everything will be compared to the 5-year average for each of these crops. So production was fairly stable for corn, a slight 2% increase. Ethanol was down about 5%. And as a quick note here, for corn and soybeans, the crop marketing year starts in September and goes to the end of the following August. So I know a lot of people think of ethanol use being down considerably, and it was, but most of that, or a large part of that, was in the previous marketing year. So this would be from this September onward, and the projection, because most of the months are still ahead of us, is about a 5% decrease in ethanol use. Livestock feed use is up 5%, or projected to be up 5%. So basically the decrease in ethanol use and the increase in livestock use kind of counteract each other. The big news with the corn markets is that we have had and are projecting surge in exports, 27% increase. And the end result is we're expecting ending stocks to drop pretty close to 20%. And we'll see the consequence on prices here in just one slide. This is the CME futures price for corn. It's the harvest contract, December contract for this year, 2020. And this information came on November 24th, just for context here. So that dashed line represents the 5-year average for that contract over the last 5 years, just kind of give a baseline there. And this first arrow would have been about a year ago, early December of last year. And so essentially what the market was saying is there, and if you read that over, it looks like it's about $3.90 a bushel. So the market at that time was predicting that the futures price this year in December would be $3.90 a bushel. Now COVID, that next arrow is about when COVID hit. So the market was right about at the 5-year average at that time, just a tick below that. And then as COVID progressed, the markets collapsed there for corn, got down to about $3.20 a bushel on the board. That would have put Kentucky prices roughly about probably 10 to 20 cents below that. So let's call pretty close to $3 a bushel. At harvest time, that would have been an absolute disaster for Kentucky grain farmers. And luckily that changed. So by the end of the summer and early August, prices started coming up. And you can see over the next few months, they just shot towards the moon. We had about a full dollar price increase between the low and the high. And if you look at the price increase over that 5-year average, it's about 50 cents. So how does that translate into Kentucky corn prices? Again, we were up pretty close to $1, called it 90 cents here from spring and summertime. And in late November, when I put this presentation together, November 24th, you could essentially sell corn in Kentucky for somewhere between $4 and $4.30 a bushel, depending on where you're at in terms of what that exact price was. If you're forward contracting for the wintertime, so somewhere between January and March, you'd be looking at somewhere between 420 and 460 a bushel. Again, incredible prices. We haven't seen anything like this since 2013. In terms of what this translates into increased profitability, we're talking somewhere in the range of $75 to $150 per acre, an incredible amount. Given that a lot of farms have been struggling just to essentially break even or have a little bit of profit the last 5 years. How does that translate into the next crop year, 2021? Not quite as good as this year, but prices are up about 50 cents a bushel over where they're expected to be this summer. And that translates into about $3.80 to $4 for new crop delivery for next year if you contract that. Or if you contracted that end of November. Markets, I think, are roughly the same for corn right now. They might be down a few cents from where they were in late November when I did this. For soybeans, again, most of the reports I've heard is excellent yields kind of throughout the state to go along with these really good prices. So here's the supply and demand dynamics at the national level. Again, this is compared to that 5-year average. As with corn, production was fairly stable, just a slight 1% increase over that 5-year average. Domestic use, the crushings were up about 8%. As with corn, big news were the increase in exports, both up until now and projected for the rest of the marketing year. Then result is projected 60% drop in ending stocks, and that's essentially what has driven those prices really high. Here's that CME soybean futures contract. Again, that's essentially about the 5-year average for the harvest contract. I'm sorry, this is the January contract. So the harvest contract had expired when I did this. So the next contract would be the January that we'll use kind of as a proxy here. So there's that long-term CME average, about 930 a bushel for that 5 years. That first arrow is where we were about a year ago, early December last year. So the market was projecting somewhere about 950 a bushel on the board, which would be about 930 in terms of cash price in Kentucky at harvest time. COVID hit, we're slightly below that 5-year average. Prices plummeted, not quite as bad as corn, but still not good. Right about that time, the board was at 850, so that would put Kentucky price at about 830 a bushel. Not as bad relative to corn, but there wouldn't be many happy farmers at those kind of prices, I can assure you. Early August, prices start going up. And again, just like with corn, over the next few months, they shot to the moon, in fact, probably even higher. Over that time period, prices were up over $3 a bushel. If we compare that to that 5-year average, they were up still over $2.50 a bushel. So fantastic prices regardless of how you're looking at it for context. How does that translate into Kentucky prices for the current marketing year? Again, we're up over $3 a bushel from where we're expecting it to be. And that translated into price of about $11.40 to $11.80 per bushel in late November here in Kentucky. If you're forward contracting, bump that up about 40, 50 cents. So $11.70 to $12.20 a bushel. If you were forward contracting for January to March delivery in late November. And that translates into increased profits of about $100 to $200 per acre. Again, just amazing increase in profitability given where we've been the last 5 years. For the next year, as with corn, things aren't quite as good as this year, but they're still very good compared to where we've been. We're up about $1 a bushel from where we're expecting it to be, and that's translating into essentially actual Kentucky price of $10.40 to $10.65 for new crop delivery if you're contracting or if you contracted in late November. Wheat, which in Kentucky would be soft red winter wheat. Again, let's compare that, or let's look at the supply demand dynamics. So production is down 13% compared to that 5-year average. We had low initial stocks coming into the marketing year. So those two combined were down 24%. So that's our supply. In terms of demand, total use is down 14%. So demand is down, but not down as much as supply was. So the end result, we're projecting to have a 40% drop in ending stocks And that's what's driven the steep increase we've seen in wheat, and we'll see those details in the next slide. Here in Kentucky, expect a lot more wheat production for next year in terms of the harvest. With the excellent prices that we saw in the fall when farmers had to make a decision if they're going to plant wheat to go with the double crop soybeans. Given those excellent prices, we should have a lot more production for next year. Here is the CME wheat futures contract. This is the July, which is the harvest contract for soft red winter wheat. There's our 5-year average. So actually, this last year we were consistently above that 5-year average, in some cases considerably. We've had actually pretty good prices the last year and a half with wheat compared to where we have been. So that first arrow again is about where we were a year ago in early December. So about 550 on the board, somewhere in that range. COVID really didn't have a huge impact with the wheat markets like it did corn and soybeans. It generally trended down. By early August, we were down a little bit, but prices started going up, and again, they increased dramatically, not quite like what we saw in corn and soybeans, but they rose steadily. And we probably had a price increase about 70 cents a bushel for wheat from where it was in early August. But the other way to look at this is compared against that 5-year average, and we're up well over $1 when you look at it from that context. So excellent prices for wheat given where we've been the last 5 years. How does that translate into Kentucky, or prices for Kentucky in this current crop marketing year? Well, unfortunately, most of that price increase happened after harvest, a few months after harvest. So the farmers are going to benefit the most from these price increases are the ones that have stored the most grain. And if you did, you sold in late November, you're looking at price somewhere between $5.75 and $6.20 a bushel. For next year, we still are looking at really good prices. We're up about 70 cents a bushel from where the expectations were earlier in the year. And that's translating into roughly about the same prices next year as we were looking at this fall. So about $5.75 to $6.05 a bushel. Marketing opportunities. So let's look at this for the 2020 and 21 crops. Basically for the current marketing year, most of those decisions have been made. There's still a fair amount of stored grain, but overall we've got incredible prices again, especially for the 2020 crop, and we've got pretty good prices for the next marketing year also. Again, with corn and soybeans, these are the best price we've seen since 2013, 7 years ago. Yeah, this is really good. Here's a big question. So the prices that we're seeing for next fall, the next year's crop, when we get there, are those prices going to be as strong as they're projected? And I think it's probably the most important question that grain farmers in Kentucky can be asking themselves right now. Because we've had some hard years here. Again, starting in 2014 through this last year, we've not had very good price, and we've got quite a few farms out there that have been struggling just to get by, and some probably just barely hanging on. So this year is going to help those farms tremendously. But we still need another good year to get them back into good financial straits. So for those farms, they really, in my opinion, can't gamble too much on prices improving by next year. So if that's the case, right now might be a good time to hedge at least a portion of next year's crop. My philosophy is you do that, and then you hope that's the worst price that you sell at. These prices are a gift. We did not expect them. I don't think there's anyone that was going to predict that we'd have these good prices for all three grains, corn, soybeans, and wheat at this point. I just hope that our farming community is able to take full advantage of them. And I hope these prices keep up at least through next fall and get us in a little bit better shape than we've been. I wish we could have done this live, but I hope this works out, and it's a privilege to be part of this. Thank you.